I want to talk about margin now. Now you understand this margin clearly. Let's go back to margin now. So margin is the amount in dollars needed to keep your position open and running. Not just open, and running. If your margin goes to zero, your position will be forced to close. That action of your position being forced to close is another terminology that we'll talk about. Now, types of margin, we have cross margin, right? Let me explain cross margin. Let me explain isolated margin first. We have cross margin and isolated margin. Now, with isolated margin, more money. With isolated margin, you can only lose the amount you use to open the position size. For example, let's go to our whiteboard. Now, for example, let's say you open one BTC using the initial example, one BTC equals to $20,000. So you know that before you can open one Bitcoin, you need to use at least $200 and 100x. So let's say you open one BTC with $200 and you use 100x. 100x. So you will be spending just $200 to open that position, right? Now, as I've explained earlier, if the original price of one Bitcoin goes to 20,100, you're already losing $100 from this your $200. If it goes to if it goes to 19,900, you're already losing $100 from this your $200. So you'll be seeing your margin at minus $200, minus $100. You'll be seeing your P&L at minus $100, and your margin will be going down. You understand? Your margin you may see your margin remain as $200, but in right sense, logically, it's no longer $200. It's now $100. You understand? Because you have lost already $100. Now, if price of one Bitcoin goes further down to 19,800, that means your margin has now gone to zero. Automatically, your trade will be closed if you are using isolated. If you are using isolated, automatically your trade will be what? Will be closed, since your loss is now gone above, is now gone equal or above in fact, it's not even above, equal. Once your loss have now gone equal to your margin, that means you no longer have the margin to keep the trade running. You have lost your margin. So your trade will be forced to close in loss, and your money is gone forever. You can't get it again. That's isolated. Now, if you are dealing with cross margin, right? Let's say you are dealing with cross. Now, this is how cross works. Because what did I do? If you are dealing with cross margin, let's say you are dealing with cross margin, okay, and in your wallet, in your future account wallet, because you have a futures account where you put your USDT, since you are trading with USDT. Now, in your futures wallet, let's say you have 500 US dollar. That's in your futures wallet, but you are allocating just $200 to this trade. You understand? You are allocating just $200 to this particular trade. That means your margin is just $200. Your balance will be reduced, since you have removed $200 from your balance to trade this, to place this trade, to buy one Bitcoin or sell one Bitcoin at $200. Right? Your margin will be remaining 300. Right? Your balance, will be remaining 300. 200 will be taken to the trade. Now, if the trade begins to run, and the price of one Bitcoin goes down to 19,900, your loss will be $100 minus $100. The trade will keep running. Now, if it goes down to 19,800, your loss is $200. Now, your trade will not be forced to close because you are using cross. It will go to this your $300 and bring $100 from it again to make your margin now become $300. While your balance remains $200. You understand? Your balance remains $200. It will keep running. If price of Bitcoin drop again to 19,700, it's not going to close. It's going to bring another $100 from this your $200 so that your margin now will become $400 and your balance will become $100. If price of Bitcoin drop again to 19,600, sorry, now to 19,600, now you are at loss of $400, which is equivalent to your margin. It's not going to still close the trade for you. It's going to bring this $100 again in, and your margin becomes $500. Now your balance is $0. Now, if price of Bitcoin drop again to 19,500, then you don't have anywhere to bring money from again. You are now out of the trade, really, and you have lost all your money, both the one in your balance and the one you use for the trade. That is cross margin. It keeps bringing more margin from your wallet to keep the trade running. Now, if as the trade is running against you, you still don't want to be forced out of, you can add more money to your wallet. If you add like another $1,000 to your wallet now, the trade will keep running, or you just close it like that. So the difference between cross margin is that and isolated is that with isolated, once your initial margin, once your loss goes equals to your initial margin, then the trade will be closed. You still have the money in your wallet to not be touched. Nothing will do it, right? But with cross margin, to keep increasing the margin until your balance goes to zero, and there's no way for it to bring more margin for you again. So when you get to that level where it cannot bring any margin for you again, then you are out of the trade. You have been what? Let's go to the next word. Liquidation. Liquidation happens when you don't have enough money, enough margin to keep a position opened, and your position is closed forcefully. So liquidation happens when you do not have enough balance. Your margin has gone to zero. Your loss has been equals to your margin, and there's no place to bring more money into your margin. Then you get liquidated. You get liquidated. That means you have lost your money. For you to continue trading, you have to bring more money. If you don't have more money, you have to go and hustle and get more money. If you cannot hustle and get more money, you have to leave trading alone. Don't be scared. Don't be scared. Definitely, we'll teach you how to handle all the losses such that you will not get wrecked. That's exactly what you are paying for, right? All these things I've been saying since morning, there are things you can get freely on YouTube, Google, and whatever. You will not get it with all the attitude and explanation, but at least you get some clue and you'll be able to place trade. Understand? Now, let's check all these things on Binance, right? Let's check all these things on Binance. Now, the next one I'll talk about is stop loss and take profits. You know, when they say stop loss, that means the thing was going against you and you cannot take the loss again. You don't want all your money to finish inside this loss. You just cut your loss. That's stop loss. You can do it automatically. You can tell the system that if this thing begins to go against me and my loss gets to so amount, please, I'm not doing it again. Cut it. That's stop loss. Then take profit is when the profit is your prediction is going in your if the price is going in your way, and you realize that you're already in good profit, you want to close and claim out so that it will not turn and start going against you again. You can also do it automatically that at this also price, at this also amount of profits, please, even though if I'm not with my system, close the trade for me in profit. Now let's go see all these things I've been talking about since on the chart. On the exchange, sorry, Binance exchange. Now let's go see it on Binance Exchange. All right. What did you talk about? Let me just check. Okay, we'll talk about position, position size. We talk about margin. So I'm going to take both of them together. Okay. I believe you can see my. Okay. All right. So All right. Thank you. So now number one is this is the position size, as you can see where they write. If you are using phone, let me open my phone and follow it up for you. Now, if you are using mobile, right, and you go to Future Street at the bottom of your home page, now you will see it is it's just like a straight stuff. You see at the top of that page, you see USDS-M, you see coin M, you see options, you see leaderboard. You understand? So you just want to see that is you click on that USDS-M, then you will see BTC USDT, perpetual, then you will see cross. That's where you change the kind of leverage you want to use. But for system, it's not there. They have different spots. Okay, so for phone, you see cross, a place to change it. Cross, you can change it to cross. You can change it to isolated if you want. Trying to find it here. I don't really play straight with system. I mostly play straight with phone. I just analyze the system. Just a minute. Let me not use that to waste time. I will still find it later. Okay, so that's where you change from isolated on your mobile. If you're using mobile, you understand. That's where you change it. I'm trying to find. Okay, look at it here for PC. I didn't even see it. My eyes was. So you can change to cross. You can read all of this. You see that they are the things I've explained earlier. Right now, this is isolated. You can choose the one you want to do. So let's say I want to use cross. Sorry, I will not be able to open trade like I did for sports because this is futures. Futures move very fast. I can't joke with it. I can't even joke with it. All right, I'll just be using mouth to explain it. All right, so this is the price which I want to start from. You know, I told you that you are predicting from a particular start point, right? So this is my start point now. Now I can predict from here, up or down. Then now this is the where I will put position size. If you are using phone, you will see stop limit. We'll talk about stop limit later. Then after that, you will see where they write stop into bracket USDT. That's where you put your sorry. You will see where they write amount in BTC, right? Just here the right size, but if you're using phone, the right amount. Anyone that you choose, same thing. That's where you put your position size. You can put any amount there. If I decide to put this, I decide to put one here now, right? So it's already telling me that I'll be needing $335 to open long. You understand? It's like this because of the leverage. I'm looking for the leverage so that I can change it to 1. Okay, look at the leverage here. If I put the leverage to 1, for example, let's say I put it to 1, you will see that the amount I need to open that trade will increase. All right, you see, I need 20,022 because of fees. There's something called funding fees. I will explain it later. You understand? That's why there's difference. Maybe long is paying short or something like that. That's why you see that for me to open long, I must have 20,000 USDT, 20,042 USDT. For me to open the short, I must have 19,849. The difference is something we call funding fees. You understand? I will explain later, right? That's what I can open. That's the amount. But the highest I can open, the highest position size I can open is 0.03 with 1x. So if I put anything higher than 0.03 inside this, it's not going to move, to not go. The max I can open is what? If I drag this thing now, this is telling me This is just showing the percentage of my money I want to use. So if I'm doing 100%, that means I'll be opening 0.03. Can you see 0.03 here, 0.03 here, right? So it's going to cost me 60 USDT to open that trade. Excuse me. It's going to cost me 60 USDT. I cannot use all the money because of fees. They have to remove their fees before I even open the trade, right? So just as it is here, that's how it is on phone too. If on phone you put an amount here, it's going to show you, it's going to show you cost, like how much you need. Now, if I increase my leverage, you see that this will reduce. The maximum I can open will increase. Sorry. Let's say I want to buy 1 Bitcoin now. Let's say I want to buy 1 Bitcoin now. I want to trade with 1 Bitcoin. Now, if I open it long with 1 Bitcoin, I must have 20,000. 20,000 for 20,043 USDT for me to open 1 Bitcoin long, right? But if I increase my leverage to, let's say, 100, you have the right, you can move the leverage anyhow you want. If I move the leverage to, like, let's say 100x, you will see what will happen. Now with 100, I can open 1 BTC with 392 USDT. As you see, can you see it? Now it has reduced the amount of money I need. Before I was needing 20,000 to open 1 BTC, but now I'm needing 401. So I must have 418 in my wallet. Currently, I'm having where is it? Where is that balance? Currently, I'm having 75 USDT in my wallet. That's what I'm having right here. If you just open a new balance, Binance, you'll be seeing 00 here. That's available. Are you getting it now? So it has increased the maximum I can open. Before, maximum was 0.003. But now I can open more Bitcoin. I can open 0.17 now. You understand? But the problem here is that I'm opening more BTC with less money. So if it goes against me, just 1 minute, 1 movement against me like this, I'm out of the trade because my $70 will finish and I'll be liquidated. I can also increase it to 125. Before you can use all this high leverage, you have to do your KYC. If I increase it to 125, you see that you further reduce the money I need to open 1 BTC. Okay, see that it has further from 441, it has reduced it to 400. Right? So I'll be able to open 0.1 BTC. If I want to open shorts, I'll open with 158 and I'll be able to open 0.472 BTC. I hope this is clear right now. I hope this is clear. So I've cleared the hair on cross margin, isolated margin, position size, and leverage, right? All in one example. Now the next one is take profit and stop loss. You just have to click on this. It's also there on your mobile phone. You can just see it under that adjustment for your percentage. You see TP/SA. Just tap on it. When you tap on it, it's going to give you two. Yes. That's right. The higher the leverage, the lower the amount of BTC you will be able to trade. No. You are not right. The higher the leverage, the higher the amount of BTC you can trade, the lower the amount of money you pay. You understand? If you are using the 100x, you can open 1 Bitcoin with the current price now is 19,800. So if you are using 100x, if you are using 100x leverage, you can open this with 1,000. You can open this with $198. But if you are not using leverage, you need this amount of USDT here before you can open it. So if you are using high leverage, then you'll be needing little more money to open high accounts. You understand? High position size, sorry. But the problem is that you must be able to hold it if it begins to go against you, because you are opening one Bitcoin. If Bitcoin can move $100 in 1 second, it's very, very easy for it to move it. And you're using only $200 to hold that kind of that kind of leverage. So if you are wrong and move against you, you're already in trouble. So stop loss and take profit. Take profit is simply where you want to cut the trade, whether in profit or in loss. If you are buying, for example, you start buying from 19,848 and the price begins to go up, you can set it that if the price should go to 2,000, 20,000, sorry, in my favor, it starts from 19,848. So if it goes 20,000, that means I'm already in profit, right? So just take the profit from me and close the trade. I'm okay with that little profit. Then if it begins to go against me and it goes to 90,000, please, I don't want to incur more losses. Just close it for me with loss. I hope everything I'm explaining is understandable and you're following. So that is that about terminologies. Then let's go to the next. Let's go to the next stuff. Right. So the next one we'll talk about is other types of futures. Now, there are a lot of other types of futures that are not on Binance. They are not on spot, but these are the three major ones I'll be using. We'll be using. Then, if later on you want to use more some other strategies that requires other form of orders, then you have to learn it. But these are the three that I personally use. You understand? You know, trading is very personal. These are the three type I personally use. And I cannot start teaching what I do not use. All right. So just like it is in sports, limit order is when you are buying below the current price and selling above the current price. That's limit order, limit buy, limit sell. Now, if you are doing market order, you are buying at the exact point. You don't want to wait at all. Just give me the best price in the market and I'm okay. Now, if you are using stop limit, you are going the other direction of limit order. You understand? If you are doing stop limit buy, that means you want to buy higher. If you are doing stop limit sell, that means you want to sell lower. You understand? So if you still have, if you don't really understand it, you can still go back to that spot. Okay, let me just give you an example. Let me illustrate it to you on the Binance app. Okay, so this is where you change. You see, this is market limit and stop limit. Then you can see other types of orders here, but these are the three that I basically used, and that's what we'll be talking about. Okay, see, there is stop market, there is trailing, there's post only, there's TWAP, all of that. But basically, these are the three we'll be using. If you want to use limit, that means, why is this thing being so slow? So if you are using limit, all you have to do is put the price that you want to buy. If you are doing limit buy, you see, if you are doing limit long, that means you want to long from a price lower than this current price. The current price is 19,500. So you may want to long at 19,000. Use limit. Then if you are doing limit short, that means you want to short at a price higher than this. So maybe you want to short at 20,000. You just put the price you want to short at here, put your position size here, pick your leverage as normal, put your stop loss and take profit and press on the order you want to place. Now, if you're using stop limits, just the way we explained for spot trading. So if you are doing stop limit long, you have to put the price where you want the order to be placed. Then you put the price order here, put your leverage, your position size, then your stop loss and take profit. If you don't understand this, please refer to that video of how to other types in sports trading. And if you are going the other way around for short, that means you want to short at a price lower than the current price. So just put the stop price where you want the order to be set, put the price that you want it to be set at, then put the price, distribution size, and press short. So that will be all. We are done for this part. So we are done with this part of introduction to cryptocurrency trading part 2. We are done with it now. We are done with futures trading. And after this video, I believe that you'll be able to place trades on futures, be able to place trade on spot. For example, if I should give you a signal that long Bitcoin at 19,200, stop loss at 19,000, take profit at 20,000, you'll be able to place it effectively. You understand? Though I've not taught you how to select your position size, but you'll be able to know how to place it. You may not know how to select your position size yet, but that notwithstanding, you'll still be able to place a trade. Even if you don't know how to select your position size, you can select how much you want to risk on that trade. You understand? So you know how to do that already now. Then if I ask you on spot that go and buy burger slash BNB USDT, you know how to buy it. If I say burger slash BNB, you know what it means. Burger slash BNB, it means that you have BNB in your wallet to buy burger. You understand? So you know how to go about it. That's just the major aim of this part for you to be able to place. Now, the next thing we'll be talking about is future trading. The next thing we'll be talking about is futures trading. Now, that will be our next class. That will be our next class, futures trading. That will be our D5. And sorry, not futures trading again. Forgive me. That technique analysis. That will be our next class, technique analysis. Now, you cannot just close your eyes and press buy or close your eyes. You know, trading is just you pressing buy and sell. So definitely any idiot can trade. Anybody that knows how to read can carry his phone, read about how to place trades, read about how to place trades, fund Binance, and place a trade. Anybody can do that. Okay. But if you have to do it as a trader, that means you want to be doing it every time consistently for consistent profits. That's where the problem comes. Now, for you to be able to do it consistently and make consistent profits, you need to do analysis. You need to have an edge over the market. So this is what we'll be teaching you with this technical analysis. There are two ways to analyze: technical analysis and fundamental analysis. So we'll talk about technical analysis first. Then when we are done, we'll talk about fundamental analysis. So this part is going to be the longest part. This may take us maybe 10 days, you understand, or less. All right. So thank you very much. See you in the next class.